Well, good morning, folks. A quick update for you here, just to keep you abreast of what's going on. So, euro and the pound have fallen through support. Unfortunately, not good for the euro long trade. And for the pound, we've just narrowly avoided hitting the stop loss, actually. So, we're still in that trade long, but both looking weak. Reason for that is because the dollar index has rallied. And, well, we're not quite at the top yet. This pink zone that we're touching at the moment is the top of this recent rally from May earlier this year. So, we've actually got as high up on this chart as we have been since May. End of May 2023, and just touching that level right now. So we've eventually broken through that 78.6% Fibonacci. We rallied up into these sort of resistance spikes a little earlier, 2 days ago. Yesterday, not much happening because it was Labor Day in the US, so just a little tiny day. And then today, we've just pushed up higher, bringing everything along with it, including the euro, the pound, and the dollar yen, which is this one over here. And you can see the dollar yen's just reaching up. And we're just actually about to touch that spike high that we reached a few days ago, that reversal candle. It'll be really interesting to see what happens because we've got the threat of the Bank of Japan hovering over us in terms of intervening in this currency. And if we get above 147.30 something thereabouts, that'll be the highest level that we've reached since November 2022. So a very significant level here. And if you have a look at where this red line is and where we are at the moment, there was a lot of intervention, a lot of moves up and down, and two sets of intervention by the Bank of Japan, one around about 150 and a bit, and then another occasion at around 146.60 or so, which is more or less where we are now. We're just slightly higher than that. So whether we'll see that creeping on or not, I don't know. But overall, we're just seeing the dollar strengthen across the board against all the major currencies. And that's dragging down the NASDAQ. It's dragging down gold. It's dragging down some of the other commodities. So once again, story is all about dollar strength. Let's go across to the commodities and quickly look at natural gas. So this is moving down. It's not just because of dollar strength, but dollar strength does play an influence in this because quite a lot of natural gas is exported, about 12% from the US at the moment. And so any strength in the dollar will see a decline in commodities generally, not so much natural gas, as I said, because the Henry Hub price and a lot of what goes on in this pricing is based on US supply and demand. But there is that element of the exports to actually, I think, predominantly Japan. So we're just coming down. There's that bottom channel line. This is a 4-hour chart. So we're just touching down there. We went long again at $2.66. And we've got, now we're actually stuck between two gaps. We've got the gap above us, which formed over the weekend. And then we've got the gap below us, which formed over the rollover. So, or just before the rollover. So we've got this gap below us and this gap above us. I think they're both going to have to be filled, actually. So I wouldn't be surprised if the price drops down to 255 again, to the top of, or to the bottom of this gap, really, which means we'll have to break this rising channel line and retest that 255 level. Failing that, if we don't do that and we move up first, we're going to have to get to the top of this gap, which should take us back up to around about 275. So that's quite interesting. If we drew a neat little sort of picture around there, you see we'd be stuck right in the middle of this gap. We could just put in a little ellipse there and put this as a sort of a little island in between the two gaps like that. So that's where we are on natural gas, and we've got to get out of this little island, break up into the top gap or down into the bottom gap. Probably both at some stage. We'll just be watching that closely, and I'll keep you updated on natural gas. And then WTI, we went short. We reached the selling zone that I've been eyeing for quite a long time now. If you remember, I said we should probably just break up through this high, through this range top, perhaps make a false break above here and then move back to within this range. And so we're short now at just around about $85, 85 and a bit, looking for a move back down into the middle of this range, which would be around about $80 to $82 somewhere, perhaps down to this 200 period moving average, which could actually take us as low as $75. So we'll keep a very close eye on that. But for that, we're short at the moment. We're long on natural gas, short on WTI. Brent crude will follow the same. Sugar's just moved up a little bit. I didn't add any short positions to this. A lot of people were saying, should we add a bit more short to this? We've got our first tranche in on this very small piece after having closed that gap. And now we're looking for a potential move up to, I don't know, 26 cents, 26 and a half cents, maybe even up to 27 cents before looking to add a little bit more to this. If we don't get up there, we'll just stick with what we've got. And that's just our first portion on the sugar short trade, and we'll see how that develops over time. Wheat, again, if you're trading wheat, I'm not, as you know, but still looking weak, just moving down. Daily weakness every single day is just making a lower low, lower high, and just creeping back down towards the support around about 575, 580. And eventually, if we can close beneath this spike low here, at about 575, we should see wheat begin to move down on its journey into the 400s, somewhere in that region. And then gold, we expected a bit of a pullback on gold, perhaps not quite as sharp on silver. We've pulled back very sharply on silver. Palladium continues to move down. I think that's heading down to 600. I've detailed the reasons for that. In fact, I've got quite a long video on palladium somewhere on this channel. And then platinum also just pulling back. Gold was the laggard moving up, but it's also the laggard moving down. And gold isn't pulling back nearly as sharply as silver or platinum. So I think gold is just being a little bit gentle, really, on its moves up and down, and hopefully we'll find support somewhere in this region. We're at 1,930 now on gold, and I think we could sort of stop this downward pullback or retracement if we're going to see strength in gold, and if the dollar does sort of start to weaken at some stage, which is not showing any sign of at the moment. And we're going to need the dollar to weaken a bit for gold to get any more upward momentum. But we could see a pullback down to 1928, 1925, down to this region here, in order for gold to find more of a footing for a continued move higher. But if the dollar continues to move up as it is at the moment, we could see gold pulling all the way back down below 1,900, and we'll keep a close eye on that. Then when it comes to stocks, NASDAQ and S&P, I'm not going to illuminate these too much, but just pulling back a wee bit. Not much happening. Let's just focus on NASDAQ. S&P is pretty much the same. We've broken above this head and shoulders line, the shoulder line, and we've come back down to the top of that shoulder line, just testing it from the top. Really, you've got to say this is kind of bullish, really, and until we break and close beneath this shoulder line and beneath some of these moving averages, it still looks to the upside for NASDAQ, and the same on S&P, although I haven't got that head and shoulders drawn in here. It's very similar, and I had a line drawn. Let's just put one in sort of across like that, similar to the NASDAQ. Actually, this one really hasn't closed above that shoulder line just yet, so I've drawn it fairly roughly, but there it is. You can see perhaps one day we did close above it over there, and then these subsequent 4 days have not closed above that shoulder line. So if anything, if there's going to be any weakness overall, it looks like the S&P is the one to keep an eye on. If this fails where it is now, we might see stocks begin to move lower, bearing in mind that the NASDAQ has broken above its shoulder line and holding above there so far. We're still short on NVIDIA and looking to sell Apple. NVIDIA I'm not going to go into in more detail, but we're looking for a move down to 380. Let's just quickly examine this chart. So we're holding above this rising trend line, channel line, whatever you want to call it, holding beneath it rather, but we are above this red horizontal support line. And actually, if I look at that on the pre-market price, we're just on that line now. We're below where we are currently on the closing price, and in pre-market we're just on that red line. Our target for here is the bottom of this move down to the 100 period moving average, and the top of the gap at around about $380, in the middle of the gap at around 350, and then eventually the bottom of the gap at around 320. So that's the overall idea. How long it's going to take and when it's going to, and if it's going to happen, we'll have to wait and see. 520 is about the top that we reached in post-market, post-earnings. So we'll have to see how that goes. And then Apple, let's just have a look at one more. AMD will follow the same as, actually, while we're here, let's look at AMD. So this one's got up into that selling zone that I pointed out. This looks like, I'm going to copy this channel line, clone it. This does look like a bull flag though, but we haven't reached the bottom of this bull flag yet. So there's room for it to move down to the bottom of this flag, potential flag. That's where the 200 period moving average is on this day chart for AMD. And this is the selling zone that we had highlighted earlier. So if we see the semiconductors chips begin to move down, AMD might just find resistance here at around about 110. Might be a good opportunity to sell it if you're looking to sell semiconductors. We're already short in NVIDIA though, so I'm not going to add AMD to it, but AMD shorts at around 110 if you like those ideas on shorting the semiconductors, and that's not a bad idea. And then Apple, I still think Apple's going to probably try and drag everything else up with it because we haven't filled this gap, and we've got to get up to at around about $191 on Apple to fill this gap. We're now at 189, so it's not far above us, but and there is another tiny little gap above there and another one here, so a few gaps could take us all the way up to 192.50, somewhere around there. But I think Apple's going to have to fill this gap probably today, or should I say possibly today, because these markets are all quite interesting. Let me just show you one quick thing while we're still on Apple. What we have here is a potential abandoned baby or an evening star. Let me just show you that quickly, just within a little ellipse here. This is an evening star as it stands at the moment, or abandoned baby. That right there, so definitely a star, and it's gapped up and it's closed higher. Pre-market price is over here. It's below where we are on that close. If this pre-market price opens at around 187, which it looks likely to do, and then moves down, we'll have an evening star candle pattern or an abandoned baby candle pattern, which is pretty bearish. We may not even get to the top of that level, so bear that in mind. Here are the yen crosses. Now, all the yen crosses looking somewhat weak, actually, especially the Aussie yen. We saw the Aussie dollar weaken against most things because the Australian bank, I can never remember the name, Australian Central Bank, Australian Bank, whatever they call themselves, didn't raise interest rates. They stuck at 4.1%, which is considerably lower than most of the other countries that were in this mix. So at 4.1, a lot lower than the UK and the US and the Eurozone, and therefore the Australian dollar weakened predictably, pulling the Australian dollar yen down with it. But we're also seeing weakness on the Swiss yen, CAD yen moving up a little bit with the dollar yen, but euro yen, pound yen, all having quite sharp moves down today. And then this dollar yen moving up to this level, this intervention level, or potentially this double top here at around 147.50. So we'll have to see how that all goes. A lot depends on what happens with this dollar index right here at this level that we're at right now, top of this pink zone, and this previous high going back to May, June this year. And overall, that's a pretty key level where these red lines are and the current price is. All of this sort of band here at around 104 to 105, very key level for the dollar index overall. If this is going to weaken, then we should not form a higher high here. We've already got a lower low on this move down. We don't want to form a higher high. It means we'll be getting an expanding pattern, which overall is actually a bullish pattern or a megaphone trumpet type pattern. But we do have a lower low, but we don't want to make a higher high simultaneously. If we can keep it below this high, make a double top here, and we'll have a lower low and a double top, which would be a pretty bearish pattern indeed. But we don't have that just yet, and the dollar is still pushing higher, and that's dragging up the dollar yen, it's dragging down the euro and the pound and the Australian dollar. Well, that was always going to be weak after today's central bank announcement from Australia. And that's all there is for today. If you enjoyed this, please give the video a thumbs up and consider subscribing to the channel. Have a fantastic day. Take care.